thanks to Amazon's early rally. He flipped places with Bill Gates, who wasn't. Other news, Facebook tops 500 billion in market cap thanks to strong earnings. Only 4 other companies have crossed that threshold. Amazon did it yesterday, 500 billion. And other news in the tech earnings sector today, Twitter plummeted 14%. The global users' growth stalled. It actually lost users in the United States. Let's put all this together. Let's start with the Amazon results. Greg Portell is the lead partner at Kearney. Join me. Good to see you, sir.
Good to see you.
So Amazon misses.
By a lot.
Well, was it a lot?
It was a lot.
Does that merely mean now? Does that merely mean the street got it wrong, or that Amazon didn't guide properly during the quarter?
Well, it's no surprise that Amazon's building out that distribution network. And I think many people were surprised about the cost of that fulfillment as they try to push deeper and deeper into the American economy.
But this is a classic case where the market is going to be childish. And well, you know what I mean here?
Yeah.
You know, the market's going to bid down the stock because it misses on one quarter when Jeff Bezos is sitting at home thinking, I'm thinking about 2030, 2040, 2050. They're thinking about a week next Tuesday.
Well, the question that needs to be answered, is this a one-time blip in the cost of fulfillment and content that Amazon can eventually work through and bring down, or is this a systemic increase in distribution costs due to labor, due to logistics costs, that's going to weigh on the stock for a while?
What do you think at the moment?
Amazon has a pretty good track record of being able to work down costs and build efficiency as they pump more product through their network.
So this would be, I mean, I'm not suggesting for a moment that anybody should buy on the back of anything we say on this program, but, you know, at $1,000 a stock, if this stock takes a 10 to 15% hit, which it could do over the next week or 3, that's an opportunity, potentially.
Well, Amazon has a pretty good track record of proving skeptics wrong. Yeah. So how they work through it will be interesting.
Twitter. I mean, all right, Twitter had really bad user numbers. The stock dropped some 12 to 14%. It's extraordinary.
Well, that's where you see the impact of investor expectations. Because in
Twitter's not delivering anything. Twitter is just a
but they beat both numbers. They beat the earnings and the revenue. It's how they did it that the investors didn't like, which is that miss on the user number.
Right, but there's a huge difference, isn't there, between Amazon, which has real warehouses delivering real things to tens of millions of people on a daily basis. Amazon is, we'd call it a tech company. It's not. It's an e-commerce company. It's delivering things.
Right. Twitter is investing in content, and they're getting into areas of content that are more expensive. So when you think about live sports broadcasting, it's very expensive. So if they are not able to increase the revenue, ad revenue they're bringing in from consumers, that's what makes investors worry.
And what I saw this week was fascinating. We saw mature stocks, Citi up 4%, Boeing up 8% and another 2% today. Whirlpool down 7%. These are large, mature companies seeing disproportionately large movements in prices. Why is this?
What we're seeing at A.T. Kearney is this interest by investors in not what the metric is. It's not whether you succeed or don't succeed. It's how you succeed. So every investor has an opinion on if a company is doing it the right way. And that could be costs, it could be revenue, it could be users. That's why these companies are starting to see big swings, because investors are looking at how they are doing it.
Good to see you, sir.
Thank you very much
indeed.